We had a couple questions too on Apple. I know that you looked at them. I'm pretty sure you and we both don't own Apple. I think we're both pretty bearish on it, so it might be a fun one to talk about because most people know what Apple is. Obviously, they're expanding into India. Their Southeast Asia sales are up, but I am trying to understand why the stock ran on its latest earnings report, and maybe you can walk
Yeah.
us through that a bit.
So, from my understanding, what the bulls were saying on Apple's earnings were their services revenue is up and their Asia Pacific revenue was also up by over 10%, I believe. So, those are the two growth drivers for Apple long term now that people are taking a look at. However, the company's overall revenue was down, and basically every profit metric was down as well. But the stock went up 5% and it's now trading right near its all time highs. And this is making the stock, in my opinion, very expensive. I did a full video on Apple's earnings yesterday, actually, and I walked through why I thought that it was so expensive. I can quickly kind of talk about that now.
Yeah, I was curious too to hear about like if they're making more money from like advertising, and it did look like most of their product sales for their physical phones and tablets were actually down in most geographies. So I know they're also offering banking to people. So yeah, like what's the story here that investors are seeing? Like they're going to become a
Yeah.
bank, like the Apple car is going to come out and like be this new revenue stream. I mean, I'm not someone to bet against Apple, but it just I don't see that story yet. I'm not sure if you were able to figure that out.
Yeah. I got comments on my video yesterday, people saying that Apple's going to take over the banking industry now as well. Like, I don't know. I just don't know.
Maybe.
All Who knows? They definitely, I don't know. Who knows? Anyways, the company's price to free cash flow has been increasing depending on where you put the chart. Let's do as close as we can get to 10 years ago, which would be right here. So the price to free cash flow, the price ratio for this business has expanded at 10%, 10.5% per year over the past decade. And in my video, I explained that this is why I am pessimistic that Apple is going to offer shareholders the massive returns that it has over the past decade over the next decade, because a large portion of the returns have come from the price ratio expanding. And if you project this out over the next decade at a 10.5% compounded annual growth rate to the price to free cash flow, that means it would more than double. It literally would be up to over 70. It would be trading for a 70 price to free cash flow. So I just don't think that's going to happen. I think that this is probably the maximum. This is me speculating. I have no idea, but this is probably around the maximum the market's going to pay for Apple is around a 30 price to free cash flow, which means that then even if the market held Apple at that price ratio, that the future growth to the stock price would only come from free cash flow growth and share buybacks. So if Apple grows free cash flow at 5 to 6% per year, buys back 3 to 4% of its shares per year, then it may offer 8 to 9%. And that's if the price ratio remains at 30. And I don't know if it will.
Yeah, I was about to say what you were getting to there to take the other side of this little back and forth we're having about Apple. Let's even ignore the banking thing or Apple Car aside. They've obviously made great products throughout the years and they're hard to bet against. So it is possible they hit a new product. If they don't, one thing we talked about in our last stream, number 29, Daniel, was a potential transition of tech companies from more of this hyper growth stage. You know, we're talking about Google, Microsoft, Apple, more to steady cash flow machines, which is what you typically see when industries mature. I think that Apple has the potential to do that here. They did authorize a $90 billion share buyback program, which of course tops Google's 70 billion. It sounds like they're kind of posturing out here. Does that mean that they will repurchase it? Who knows? But they're authorized. So even if the free cash flow stays constant and doesn't change, this company could end up buying back half of its shares over the next decade potentially, and that alone would then.
Not at this price.
You don't think so? Well, they bought shares last quarter that they reported. I think they
Yeah,
repurchased
but you have to
38
think
billion.
about, okay, $90 billion buyback sounds incredible, right? It's a ton of money.
Yeah.
But the company's worth 2.8 trillion. So what is that actually? It's about 3%. So
Well,
if
I'm
they
saying if
do,
they keep doing that, so they authorize that, right? But in theory, they're going to keep making money. They're going to keep selling iPhones. So what's not stopping them from over the next 10 years repurchasing 500 billion worth of shares, doing that same share repurchase thing
yes, but what I'm
5 times
saying is
over?
if they buy back 3% of their shares annually over the next decade, it's about 30%, not
Got you.
50. So
Okay, sure.
yeah, so That's what I mean is I don't think they're going to buy back half their shares over the next decade because unless the stock comes down. I mean, if the stock comes down, then yeah, they definitely could. But at this price, it's about a 3% annual yield.
Fair enough.
So yeah, I have this chart right here, Apple's price to free cash flow growth, shares outstanding growth, and stock price growth. You can see here Apple's free cash flow over the past decade has grown at 9%. The price ratio has grown at 10.5%. They bought back about 5% of their shares annually, and the stock price has grown by 26% annually. And you can see right here that the largest contributor to the stock price growth was actually just the multiple expansion. And that's what I mean. This is where the majority of, well, not the majority, but this was the largest aspect of the share price growth over the past decade was the multiple expansion. And I am not optimistic this is going to continue over the next decade. I don't think this is going to happen again.
Yeah, we're getting some great comments in the chat. It seems David here agrees with you. When growth rates come down, so do multiples, even with buybacks and dividends. Yes, we definitely agree. However, Rob coming in, buying back 30% of shares would still be good. No, I mean, yes, I think it's good. We definitely got into a technicality. I think I wrongly cited 50%. Daniel corrected me there. But yeah, I mean, a share buyback in general is a good thing. But to Daniel's point, when the market cap is so high, even when you're talking about billions, it's less of a percentage of buybacks than one might think. With that,
yeah, and a 30% buyback is good, but again, just think about the time frame. If you're talking about 10 years, that's a 3% annual return. And when you think about it that way, like, does 3% sound good annually? Like, not really.
So, Daniel, I'm going to take a private conversation we had to the public here because I think it was a really great one. Someone's asking, wonder what Buffett sees in Apple. He keeps buying it. And a conversation you had with me, which I loved, was how Warren looks at businesses, the person taking over Berkshire, and what they talk about 90% of the time, which actually is not stock financials. So maybe you can take this question from Financial Josh. So thank you for this.
It's also interesting because as far as I know, Buffett was buying Apple on this dip right here. Like recently, Apple was not that expensive of a stock. Like even just back in December, it was trading for a price to free cash flow of 18, which means if you take a look at the free cash flow yield of the stock at that time, it means that Apple could deliver 5.6% to shareholders at that price ratio, which is a good yield. Now we're back down
over the 10-year bond at that time, right?
The 10-year bond probably was it was 3.8%. So there you can see Apple was yielding almost 2 whole percentage points above a 10-year bond, which means investors were getting a solid risk premium on Apple stock. Now Apple is yielding 3.7%. 10-year bond is actually lower at 3.4% right now. But in my opinion, that's still not an amazing return. Now, why does Warren Buffett own Apple stock? I saw Greg Abel. He made a comment recently that whenever him and, by the way, Greg Abel is the guy who's going to take over for Buffett when Buffett leaves. Greg Abel said that whenever him and Buffett talk about stocks, 99% of the time it's not numbers. It is what is the mode of the business, and do they believe that the business is going to be around over the next 20, 30 years? With Apple, I believe that answer is definitely yes. So what they like to do is invest in businesses where they believe it's going to literally be around in 30 years, and they're very confident in that. And the fact that Berkshire has 45% of their portfolio now in Apple means that they're very confident in this business's growth over the long term. So I understand why they own the stock. And I also understand why they were buying it down here. All I'm trying to say is right now, at this price, I don't think that it's very attractive.
Yeah, and a really good point there for all investors in the chat, especially those just getting into it. It is very good to just look at a company as a business. Don't even look at the market cap at first is some good advice we've heard out there. See if you like the business, see if they have a moat, see if you like management. The price and financials, of course, are important and should come in at the end. But, if the business has no moat, in my opinion, even if it looks like it's a good price, it's not a good price to pay. And we see that with a lot of payment processing companies today. I feel like we get a lot of comments in the chat, hey, analyze this company, that company, and half of them are payment processing companies that all look cheap. But then you have to ask yourself, why are there so many of these payment processing companies? They all IPO'd within the last 5 years. Something's not adding up. So, yeah, great points. And I agree with you 100% on Buffett's mindset there.